to be here with you with everyone today because we did have some news out of Fortuna Silver yesterday. And joining me to go through that is Jorge Ganoza, President and CEO of Fortuna. And on the analyst side with some questions is Dave Kranzler. And let me pull up the news because Fortuna did announce a convertible senior notes offering in the amount of $150 million with the option to extend that additional $22.5 million higher. And they announced the pricing today. Note will bear cash interest semi-annually at a rate of 3.75%. And obviously, we did have a big move in the stock today. So, Jorge, it's great to have you here with us. And perhaps just to get started, you could walk us through the deal, and then we'll dig in a little bit further from there.
Yes, thank you, Chris and Dave, for the opportunity to speak today. We announced the closing of the transaction of the convertible today. We have what is it that we have done? We have exchanged expensive restricted bank debt for more flexible, cheaper convertible note that is very much aligned with providing maximum flexibility to our balance sheet. Through issuance of this convertible note, we are helping mitigate risks of the business and also provide us firepower in this environment to compete and be able to capture the best opportunities that emerge in the regions where we operate. So we've been telegraphing to the market that number one priority for us in an environment like this is put together a fortress balance sheet that allows maximum flexibility for us to withstand risks and capture opportunities. And that's what we have done. Listen, we're close to $1 billion in sales business. No, that's what we expect to generate in this price environment today, close to $1 billion from our global operations in West Africa and Latin America. This is an issuance of a convertible note for $150 million. That the green shoe will probably be executed, so let's call it 170. With that we are paying in full or bank debt facility and keeping a very healthy, flexible balance sheet.
Okay, and first question that I've seen pop up a fair amount in the past day, perhaps you could touch on why now, why the particular timing. You just spoke a little bit about the thought process and what you were aiming for, but certainly anything you can elaborate on there. And also if there were any other financing options you considered and how you settled on this particular strategy.
Yes, the options in front of us were simple. One is continue the path of harvesting the cash flows and using those funds to, gradually pay down our credit facility. We've been paying down at a tune of $40 million per quarter, but we could continue doing that for a year. And bring the facility down and slowly start rebuilding our treasury. But at the same time, that path exposes the company to certain risks. Today, 35 to 40% of our NAV resides at the Séguéla mine in Côte d'Ivoire. And if there were anything to happen to that one asset, what's going to happen? First, cash flows are going to be impacted. Second, the share price is going to come down. And third, under the credit facility, our liquidity would be squeezed by the restrictive covenants that we have in place. So if something were to happen, like a broken mill or a fire or a coup or anything, we would lose the flexibility we have very quickly, right? For a business of our size, because a lot of our NAV resides today on that one asset. So we're mitigating that risk So the option of not doing anything and continue this low repayment is certainly an option, but we weighted the risks of this versus doing other things. What are the other options? A convertible, a bond note, a high yield note. Will likely in this environment will be paying 7-8%, or probably closer to 10 really, on a high yield note, 10%. The other one is going to do a straight equity issuance, which is not something we would do. No, we wouldn't do that. So the best alternative at hand was doing a convertible note, which brings us $150 million at a coupon of 3.75, very competitive, and a conversion price higher than what we're trading today, 30% higher than the close, 659, 660 US, and payable in 5 years, no? Where the holders have the option to pay or convert, receive cash or convert. So, we believe this was the more sensible option that helps mitigate the risks, minimizing dilution, helps mitigate the risk, and also allows us to be in a position to capture any opportunities as they come, right?
Oh, and one more quick one, or maybe this might be a two-parter, but then Dave, I'll pass it over to you. But Jorge, could you talk a bit more about the covenants and how that changes and gives you a little bit more flexibility?
Yes, I'll give you a clear example. I seen in some of the I have read with a bit of humor in some of the Twitters and things. I don't follow that much, but some have been passed to me where there was an individual saying, why were you buying back stock and now you're doing a convertible? Well, because we were buying stock when the share price was at $3, right? Well below our NAV, right? And we believe it prudent to issue a convertible with a strike price, a conversion price of, 660, right? That's why, because you buy low, and you can, consider entering into a transaction like this when you are seeing your paper trading at multiples over NAV. Now, we believe this is the least dilutive option and provides maximum flexibility. So, we looked at several options, and this one was certainly the more reasonable one to achieve our strategic objectives, right?
Okay, and the second part of that, just before we turn it over to you, Dave, can you walk through what the funds are going to be used for? And I'll pull up the press release in the background, but obviously we should touch on that.
The funds are being used entirely to pay down the corporate credit facility and the restrictive covenants you asked about. I'll give you an example. When our shares were last year trading as low as $2.70, right? We were precluded by the covenants to participate in the share repurchase program. That was very painful for us, very painful. Looking at our share price at $273, and we couldn't participate in the markets through the share buyback because of the darn restrictive covenants in the facility, right? So we were able to remove those restrictions partially at the beginning of 2024, and started participating. But basically things like that. And as I described, if something were to happen to the Séguéla mine, be it an operational issue, a mechanical issue, a geopolitical issue, immediately our cash flows would be negatively impacted, the share price would be negatively impacted, and the covenants would get triggered and restrict our liquidity under the credit facility. So that I don't believe is a risk we should tolerate if we have means to de-risk it, right? And that's what we done.
Okay. And Dave, would you like to take it from there?
Sure. Just couple quick observations. I mean, essentially, and let's assume that within the next 5 years, the stock price is going to be substantially higher than the conversion price in the convert. You're essentially forward selling shares at a 30% premium versus, doing an outright share issuance today. And I mean, I think that's a fantastic deal. And not only that, how much of the bank debt was outstanding that you'll be paying down?
About 125, 120.
So you're saving 400 basis points, 4 percentage points of interest cost on 120 million. I mean, that's close to $5 million a year. That'll be additive to your cash flow because of this.
Yes, listen, we are taking our liquidity basically from the option of not doing anything from about 250, 280 million to 380 million. 250 to 380 million. We're enhancing our liquidity, lowering the cost of capital, and giving us the optionality of a conversion at a much higher price. So yeah, I always look at market reactions. Listen, on the convertible, we went to the market to raise 150 million, and the interest was for $500 million. No? So it was extremely well received. The fields have been over 50% to long investors, and some hedge funds have been able to participate, of course. So we certainly saw yesterday, significant volume on the stock, probably initiated by hedge funds shorting and blocking their expected allocations in the placement. But also the volume suggests that we went far beyond that, and there was emotional trading, there was momentum trading, all sorts of things like that in a market like this where you don't have investors. No investors in this market are a scarce commodity. What you have is traders, and I'm fine with that. No, people who like to trade and momentum traders, emotional traders, traders who don't know what the hell they are doing, but they just still trade. So you find a bit of everything, and this is a sound fundamental decision. Or share price performance, over the trailing 12 months, or year to date, we're up currently 30%, and on the trailing 12 months, we're up almost 45%. It's been very painful to see the market reaction for us, but I am very sure that this is a short-term misunderstood behavior on the part of the market participants on a facility that is not bringing anything but risk management and enhancing the company to capture valuable opportunities in the regions where we operate, lowering the cost of capital, and minimizing any potential dilution that could take place 5 years from now, right?
Another observation here. I mean, I was a former bond trader, and when I saw the response yesterday to the market, to the news, my first thought was, that's hedge funds shorting the stock ahead of participating in the deal, because the hedge funds is going to want to hedge out the equity component of the convert and then collect the coupon. But I was licking my chops because in the last run up, I sold the call options that I have in my personal account, and I was able to load up on July 5s yesterday under $5 a share. So I was not that I want to see the stock price get hit like that, but I mean, it was an opportunity for me.
Absolutely. I mean, this is a strange market for mining equity. There are big, significant divergences between the underlying metal and the price of the equities. On a financing like this, you get hit hard as if fundamentally the business was wrong, right? Because that type of drop, you would suggest that you had a tailings failure, right? Okay, my God, your tailings failed. Your assets were confiscated. That's the type of behavior you see in the market. So again, I think there are, traders, there are traders, momentum traders, and there is guys who just don't know what the hell and they trade, right? So, I respect them all, but yeah, I think we should be behind we should quickly leave this behind with a company with a fortress balance sheet. I mean, people don't realize this is a very capital intensive business. This is a business subject to all sorts of risks. And investors get that because I'm confronted with investors who don't understand why projects are delayed or what happened with the cash flow here or cash flow there or across the industry I'm talking. And that's because this is a very challenging business. We operate our business in complex jurisdictions, are subject to operational risk, social risk, political risk, environmental risks, climatic risks, right? I think it's prudent, if you can, to put together a fortress balance sheet. And I read some, with humor, some guy saying, here goes management again securing their paycheck. This is a company that generates $1 billion a year in sales. Management does not need to secure management pay with $150 million convertible note. That's just very, very dumb, to be honest. So, we have EBITDA margins of 40%, 42%, 45% today. The least thing we need is a convertible to secure management's pay. But I read those things with a lot of humor, and again, we're mitigating risks for a complex business and providing flexibility to capture opportunities that definitely will emerge, and we must be able to compete for those opportunities, right? We want to get that transformational asset, early. Well, we have to be agile. We need to have a nimble balance sheet. Those are the things we need. Yeah.
I have a feeling, I didn't see the tweet, but I have a feeling I know who probably tweeted it. One last thing for me. So with the increased flexibility afforded by getting rid of the covenants, is there any kind of plans on the drawing board to maybe more aggressively advance Diamba Sud, or even more aggressively? I think you have four rigs on Yessi right now. More aggressively advance Yessi, or has any potential opportunities come across your plate that kind of whet your appetite?
To answer your question, let me make a step back and recap the priorities for capital allocation we have, which we've been signaling and not signaling, but openly saying and screaming to everybody. These are our capital allocation priorities. One, fortress balance sheet, right? That's one. And we're achieving that. Number two, fund aggressively our organic growth pipeline. So, to your point, Diamba Sud is a big component of that. Our largest exploration allocation is Diamba Sud today. I was at the on-site a week ago, very comfortable with the pace, the capital allocated. I think we can achieve all that we need to achieve this year with the funding we have. Same thing at Séguéla. We just made a very exciting discovery at Séguéla, people have not captured that yet. It's Kingfisher. Watch for Kingfisher as it evolves. I'm particularly very excited about the potential of this new blind discovery in our property, only a couple of kilometers away from the processing plant. A blind discovery, excellent work done by our exploration team. We currently have 2 drill rigs dedicated to this one discovery. I expect we will be in a position to publish a research by year end. I think those are the kind of opportunities that allow me to think that Seguela, which currently is 35% of NAV, will soon be more than 40%, 45% of our NAV. So that's why, again, we need to manage that risk as well, right? That presents great opportunity, but also risks. If something were to happen in that mine, no, it would have a severe impact in cash flows, share price, and if you are under restricted covenants, it would definitely trigger the covenants, and you'll find yourself in a spot where you don't want to be, right? So we have taken that risk away by doing this, and we can now just look at Seguela on major opportunities, not the ballooning risk, no? So we have mitigated the risk. And last but not least, return to shareholders. As I said, in 2023, it was painful for us to see that we could not participate in the market because of the darn restrictive covenants, and we have removed them. So, strong balance sheet, funding exploration. Our exploration, we have our largest exploration funding budget in record. Today, it's at $41 million. After my visit in West Africa with the exploration group, we are expanding that budget to around $45-46 million in 2024, mainly to support the drilling of Kingfisher until year end. And then opportunistic M&A, return to shareholders. We are currently under a blackout, and a lockup because of the convertible. But be sure that in an environment like this, we will be all over the paper. And it's just we are under a lockup right now for a period of 2 months almost, right? Yeah.
One last quick question here. Did the exploration team that discovered Kingfisher, did they secure their paycheck?
Those guys are doing excellent work. I think over the last years, they have significantly matured or continue maturing on their understanding of geology. Sir, I would say Kingfisher is a blind discovery. I mean, there was a minute auger anomaly over a flat area where there was no historic informal mining, no historic artisanal mining, no outcrops, nothing that would suggest in that flat plain you could find a significant deposit. We covered the area with an auger drilling program, which is just shallow drilling with an auger to sample the saprolith, and they discovered one weak point anomaly, and they were not shy to put a hole through it. And sure enough, they have discovered a major structural feature hosting significant results. You already seen some of the drilling at Kingfisher. It looks most exciting.
That's 2 blind discoveries for Fortuna in the last 9 months between Yessi and Kingfisher?
Yes. And, we will continue to fund and support our exploration programs aggressively. And that's a capital allocation priority for the company. Yeah.
All righty. That cover everything for you, Dave?
It did.
All right. Well, I just have a few last quick ones here. Jorge, obviously, you've talked a lot today about the balance sheet. You've talked about that for the past couple months. Is there anything else you could offer in terms of if there's an ideal target or any particular parameters of where you'd like it to be in the years ahead?
With respect to the balance sheet, you mean?
Yeah.
No, I think we're comfortable with what we have achieved for the size of business and capital commitments and risks that we need to manage, right? With this, by year end, we expect to have liquidity available to the company at the tune of 380, if prices help, almost $400 million. With lots of flexibility on the balance sheet, and we're comfortable with that. For sustaining capital or annual rate of sustaining capital should travel annually at a rate of about 80-90 million dollars. No, that's sustaining capital at the max. It's capital we need to fund. Outside of that, for example, we have growth capital. This year, the budget for the Ambasud is an additional $11 million. That could increase next year as we successfully advance the Ambasud, we hope, and allow us to capture any other opportunities that come along. Right?
Okay. And another one that came from the press release, you mentioned here, Fortuna will have the right to redeem the notes in certain circumstances, and holders will have the right to require Fortuna to repurchase their notes upon the occurrence of certain events. Could you just give us an outline of what those events would be on each side?
Change of controls and things like that, right? That's what it would be, change of controls yeah, it's very, typical language or requirements in a convertible note, no?
Okay. And the last one for me, something we touched on briefly before we hit the record button, but obviously there was a reaction in the share price yesterday, but in terms of conversations you had and talking to some of the investors, anything you could share about the feedback? Obviously, it seems like some people are seeing it differently than others, but anything, especially because I find we had this happen on one of the calls where we had one analyst join us once, and he was concerned about some of the developments with the company, and then by the end of the call, after you'd answered his questions, was feeling a lot differently. And I know that's something that has happened at many points in our conversations or elsewhere. So anything you could share about how the investors are feeling about what you've done?
Yes, I think the day after is a good reflection. Today, the market is up in general right now, as I am looking at my screen. And Fortuna is at these 30 hours of trading in the morning. Fortuna is up, 5% with 14 million shares traded in New York. That's $68 million worth of trading. And it's only, we're not even at noon yet. And so, I think that speaks to, investors looking at what happened beyond these nonsensical, technical selling and knee-jerk reactions from people who perhaps don't even understand what a convertible is. Perhaps some people even thought that we were doing a straight equity deal or something like that. No, I mean, I wouldn't be surprised. So again, all sorts of trading taking place. I already spoke about that. But shareholders or investors, everybody gets it, no? I mean, everybody understands. If you do fundamental analysis on things and not just, look at technical charts and try to time coming in and coming out, and I do respect that. No, everybody has their own investment thesis, and I respect that and value that. But I cannot run the business thinking of the technical traits of this individual or that individual. I have to think on the long-term risks and opportunities of the business, and investors who sit on the stock for years grab that, and everybody has been very supportive, very supportive. I would say that some people were thinking, understood the logic, but were thinking perhaps about the timing. No, why right now? Because right now we're doing it from a position of strength. And that's when you want to do it. We're doing it from a position of strength. You don't want to go into a structure like this from a position of weakness, right? I have no crystal ball. I can tell you that today Fortuna is in a position of strength, and that's the time to enter into an opportunity like this. And I think we done it successfully. The book was 3 times oversubscribed, right? There was almost $500 million worth of interest to participate. It was, from the placement perspective, extremely successful. And the share price, it's painful to see it come down, but I'm very confident it will recover soon.
Well, and good to see that happening today a bit already. So, Jorge, obviously we focused on the deal, which I think was good to do today. But just before we wrap up, anything else that you'd like to share about the deal or any other developments at Fortuna right now?
Very simple. Fortuna is stronger than ever. I've never seen the company with the kind of projections on production, key assets, low-cost assets in the portfolio performing, and the strong balance sheet. We had already a strong balance sheet, but that to us was not enough. We wanted a fortress balance sheet, and that's what we have achieved. Yeah.
Well, I appreciate that and appreciate you joining us here today. And I think this will be helpful for people, obviously, on the heels of the deal. Dave, any final words from you before we depart, my friend?
Nothing more from me.
All
I
right.
think
Well,
it's a great deal.
Well, appreciate you joining us here as well. And of course, people can find out more about the company at fortunasilver.com. And there is the contact tab if you do have additional questions you would like to get to Jorge and his team. So, gentlemen, I thank you both for joining us. And thank you to everyone at home who's watching. Hopefully, this helped put some context and color on the deal. And we'll look forward to see how things progress from here. But we'll sign off for now. And thanks for being here.
Thank you guys for the opportunity.